Hi everyone, Suyin here. So today I wanted to film the next video on our investments on Autopilot series, and today I'm going to talk about StashAway. StashAway is available here in Malaysia, but they first started in Singapore. So I believe StashAway exists because they want to make investing simple and accessible to people like you and me so that we can retire well and also achieve financial goals that we want to. So what financial goals am I talking about here? It could be anything between buying a house, buying a car, going on our dream vacation, sending our kids to get quality education. It could be anything like that. And yeah, StashAway is a platform that enables us to invest simply and very, very accessible for anybody. What StashAway does is it is a platform that invests our money in a basket of ETFs. An ETF is actually an exchange traded fund, which is basically an index fund that trades on a particular stock exchange. And index funds track a particular market. So the S&P 500 can be said to track the US market, and ETF regarding gold tracks the performance of gold, an ETF about real estate for a particular country like the US tracks the US real estate market. So simple as that. And what StashAway does is it invests in this portfolio of ETFs for us, and how they choose what percentages of which ETFs to buy is based on our risk preferences, and how we choose is by filling up the form online, and there's actually a knob that allows us to let StashAway know what are our risk preferences. So if you are super conservative and you are afraid of losing money, they will have a portfolio recommended for you where you're mostly invested in, safer or less risky ETFs. And if you are high risk, I guess I'm more on the high risk side, then they'll invest your portfolio in more ETFs that are higher risk. And obviously they're going to give, a balance. So yeah, I guess let's get into what I like and what I dislike about StashAway so that we can know what it is really about. So the likes, for this case, there are more likes than dislikes, and I guess let's start off with the first one, which is the thing that is on our mind, is cost. How much does it cost us to actually invest our money in StashAway? So investments on autopilots actually, they are the simplest ways to invest because we can just put our money there and we sleep, because the platform or the entity in charge does everything for us. And with StashAway, they only charge us 3 components. So the first component is actually the management fees, which is 0.8%, and that is a pretty good number, I guess. Relative to mutual funds, they actually charge a pretty decent amount. So 0.8%, and also if you sign up with my referral link down below, you're gonna get 50% off for the first 6 months for your maximum of 100,000 ringgit invested. So what that means is, without that discount, it charges us 0.8% per year, and with that discount, you're gonna get 0.4% for the first 6 months. And the next thing they're gonna charge us is on foreign exchange transaction fee. So that is around 0.1%. And what to say about this? I guess because StashAway is predominantly in US markets, so we convert our ringgit to US dollars, there is going to be a foreign currency exchange transaction going on there, and it's gonna cost StashAway to do that. So they put part of the charges back to us as consumers or investors, and yeah, that is the next charge. The last charge would be an expense ratio charge. So when we buy ETFs on our own, we are subjected to this thing called an expense ratio, which is just basically when we buy and sell ETFs, it's going to cost us a fee, and this is the fee that StashAway passes on to us. But what happens is that they give a blanket charge of 0.2%, because for some funds it's going to cost them way more than that, and for some funds it might cost them less than that. So they give us pretty good deal on this. The total amount of fees StashAway really charges us amounts to around 1.1% per year. And I think that's a pretty good deal if you compare it to, say, a mutual fund, which charges a maximum of 5% for management fee. And they also do have sales charges, so that can wipe away our returns. So at 1.1%, pretty decent deal. That second thing I like is they claim that you have no minimum when you invest with StashAway, and I beg to differ. I think we should at least invest maybe 50 ringgit. 50 ringgit would make it viable for StashAway to actually buy a fractional basket of ETFs. So imagine trying to buy a fraction of an ETF with 5 ringgit. I think that's not enough, so please put at least 50 bucks for your minimum amount when you deposit into StashAway. So yeah, I really like that feature. So it makes investing really accessible, where we can tuck away 50 bucks, 100 bucks, 200 bucks a month. And that links to the next feature, which is that they enable auto deductions. You can opt in to do auto deductions, and it's a monthly basis where you tell StashAway that yeah, you're allowed to deduct this certain amount each month, and then you don't need to worry about it. You're actually investing automatically each month with the help of this feature. And the part of investing is you want to create the path of least resistance to make it really easy for you to invest. And yeah, StashAway has thought that through, and you can actually do that by opting in to auto invest. The next thing I really like about StashAway is that I can diversify into the US market. And actually, it's not just the US market now. Recently, they have launched more ETFs that they buy as part of StashAway, and it is looking into the European market. So I guess more of my investments are diversified into the different markets, because personally, I'm a stock investor and I invest currently only in Malaysian stocks on Bursa. Having more diversity in my assets is a good thing, because if the Malaysian market is not performing well, then at least it could be that the US and the European markets could be performing a bit better than my stocks. Who knows, right? And also another part of diversification is that some of my wealth is now held in foreign currency, so there's a plus. Oh, okay. I really like StashAway's interface. So they do mobile as well as desktop functions, and the mobile function is very decent. And what I really like about it is they also give updates. So how I found out about them hosting more ETFs, which is the European market ETFs, is that they send me emails with articles detailing why they are doing it, and also they give pretty good explanations as to the reasons behind it. I was a little bit skeptical of them investing in the European markets, because personally I prefer looking at the US markets, and they explained it away in terms of, you know, when they are looking at ERA, ERA is their, think of it as their smart robo-advisor. ERA had a look at a valuation for European market ETFs, and they believe that it is currently undervalued, and when something is undervalued and you buy it, in the long run it's actually going to achieve its actual value as investors start to buy and realize the true value of the stocks or true value of the companies. And as that increases, then your portfolio would perform better, because you actually bought those ETFs when they were undervalued. So I like their explanation there. And on the app as well, they attach all these articles for you to read and to educate ourselves about how the state of the economy is, or even to learn more about what StashAway is doing with our invested money. Next thing that I really like about StashAway is their Robo-Advisor feature, which is ERA. And what Era does is it actually is able to rebalance and re-optimize your portfolio. So what does this mean? It is actually talking about when you have a portfolio or a basket of ETFs they have bought for us, then during a different economic cycle, like say we could be in a recession right now, we probably are, and in a recession, what you can do to your portfolio is you can actually beef it up with ETFs that actually tend to perform better in this economic circumstance. So what Era does is it actually readjusts your portfolio. It sells non-recession performing funds and it buys other funds to make your portfolio perform at a better rate. So yeah, it does that for you automatically if you opt in. And if you don't want to opt in, then you can also not opt in. So you have your choices there. So yeah, that is what I like about StashAway. The con side, or what I don't like about StashAway, is pretty straightforward actually. And I think I can just sum it up into two things. The first thing I don't like about it is that I have to give up my control over my investments. So if you are that kind of investor that really think that you are the person who can do the best job for your money, then don't invest in robo-advisors because you have less control over the allocation of what you buy. Let's just say you wanted to not buy any gold ETFs, you are not able to actually do that because Era has programmed it in such a way that there has to be an allocation for gold or for them to hold cash. And that is within their programming and that's within what they are standing for at StashAway. And if you wanted to change that, no, you're not able to do that as an investor. So if you can't give up control, just find a different alternative, I guess. And the second thing that I dislike about it is I worry about diversification. So this term is actually coined by Peter Lynch, a very famous mutual fund manager in the past. He managed the Fidelity Magellan Fund, and diversification just means when you over diversify, you're actually making it worse for your returns in your portfolio. So I don't know whether with StashAway's very defensive stance of investing in more economies to make sure that the returns are actually pretty stable, they may be diversifying, but that's just my feelings and my, I don't know, my fears, I guess. But with all of that being said, the verdict is I would actually invest my money in StashAway for all the pros that I have listed and especially how accessible it is. So my intention for investing in StashAway is actually pretty straightforward and very simple. It's to actually compare it relative to my own portfolio performance. So how does a StashAway portfolio with the re-optimization feature opted in for, how does that perform relative to my own stock picking portfolio? And let's just say maybe I wanted to compare it to my PRS, private retirement scheme mutual fund portfolio, and I wanted to see which one actually performs the best. So I haven't been invested in StashAway for long, but actually a couple of my friends who have been invested for maybe a year, they're seeing pretty decent returns at 7 to 9% per annum compounding. So yeah, I would like to see similar or even better returns in my personal portfolio, and I'll keep you updated on it. Yeah, I guess that's the end. And if you want to invest in StashAway or you want to check it out, please utilize this referral link down below. What you get is you get 50% off management fees for the first 6 months and up to 100,000 ringgit invested in StashAway. So that's a good deal, and if you have a look at the details, you can see the more money you put in with StashAway, over time they actually reduce their management fees. So do check out those details, and yeah, I hope you enjoyed this particular episode of Investments on Autopilot. I will see you in the next one. Bye!